All right, so it is January 3rd, almost to December. It's already the new year, 2021. Here we are. So December was not a good month for swing trades. What happened? So what an awesome year we had. And then December, it fell apart. So if you are on my swing trade alert, if you sign up for my swing trade alerts, part of my promise to you was if I do not send out more winners in a month than losers, then I will refund your month. So so you should be seeing that in your account in the next couple of days if you haven't seen it already. So anybody who's on my alerts, you were not charged, or if you were charged, you were refunded for December. We had a winner and 2 losers. So first time we've had that happen all year. So let's look at the losers and we'll look at the winner. So Rite Aid, we had a swing alert on this. Everything on swing alerts, if you're not familiar, is all based off my algorithm. So everything I do in here is based off my algorithm. The difference is in the swing alerts, whereas my students are probably just trading strictly off the algorithm. But for my alerts, I add some other technical analysis to it that can be beneficial. So here we are with Rite Aid. So one of the benefits about this company is, they're a pharmacy like Walgreens, CVS, etc. And with coronavirus right now, people being sick, flu season kicking in, everybody's getting flu shots, that the vaccines are going to be administered and getting tests, all the stuff that's going on, these tests and everything. I would expect the pharmaceutical industry to be doing pretty well. And sure enough, Rite Aid has had pretty awesome ride. I mean, from $9 to 20 and change, and then it had a nice pullback, and then we gapped up here. Well, the algorithm indicated a trade here, winner, right? Here, winner. So 2 winners, and then we had a loser, and then running into 2 winners. But then we got this big gap up on this indication to get in. So this triggered the algorithm on a gap. I don't really I'll get in on these. It's a numbers game. Some are winners, some are not. It is what it is. But what I did in my swing alerts is I didn't alert this trade here. And I didn't do it because I wanted to see this gap get filled before I sent an alert out. Because a lot of times gaps like to get filled. And it's also a lot of times once they get filled, we see a nice run, which this is the target. So for my alert members, if this was where our entry is, then we have a potential for a really nice run. So the other thing I wanted to do was look at this formation that was taking place. So as I was going to wait for the gap to get filled, at the same time I'm seeing this formation. The market likes to make pictures. It likes to draw. It likes to draw on charts. You can see it over and over and over again. It'll make the same pictures, and those same pictures usually play out in the same story, or at least similar. You can get an idea what might be happening. It doesn't always happen, but you get an idea. So I saw this picture being formed, and this is an M pattern for me. So you can see, let me put a better line on here so you can see it. Right through here. Let's make that a better color to look at. All right, so you can see that line right there. So here's an M pattern. And I was like, well, I'm going to alert this on the gap fill. But if it fills the gap, it's making an N pattern potentially. So it could, bounce from there and go up. It could just go up from this, from the gap fill. But if it breaks this M pattern, it might be game over. And I don't mean just a little break. I want to see it break. If it doesn't break that, then there's a good chance this thing's going to rally and continue going forward and ride the corona wave. So what I did for my members is I put the alert in at gap fill, just around gap fill. And I put our stop in because we're already so close to the stop here. I put it in down here on a break here, an M pattern that breaks down, indicating that this may be selling off. So, and what that does is it still gives me a nice 1-to-1, better than a 1-to-1 going up to the target. So I'm still making, here's my entry, here's my exit, here's my reward. My reward is way more than my risk. So it works out to be really, really nice from a risk reward standpoint. From an algorithm standpoint, it's a setup. And then from this technical piece of a gap fill and a potential M pattern breakdown, that's why those numbers were given out. And sure enough, it broke that. We all got stopped out. And for those of you who are new also that are not on my alerts or haven't gone through this, I do not buy anything before my students have a chance to buy it or anybody that I alert. I'm not telling you guys what to buy. I'm just telling you what I'm planning to do. The difference is I don't do it and say, hey guys, this is what I did. I never do that. I'll take a loss before I do that. So I always say, hey, this is what I'm planning on doing at 3:55. I'm going to get into this trade. And that's, I usually throws out sometimes the day before, sometimes in the morning. And then at 3:55, I get into my trade. So, and then I give you my numbers, where my target is, where my exit is, all that stuff. So that's what I'm planning on trading. And I don't alert anything that I'm not trading. So, I could send out alerts daily, but I don't do it. I only alert what I'm trading because that's what I'm really paying attention to, and that's what I'm really focused on. So that's what gets alerted. So there we go. That's how we traded it. Took that loser. But looking back in time, just so you can see how this algorithm works, make sure we're on auto. So we had a winner. This is going back 2 years. So the good thing is we did have a loser, right? So next trade on this one, I'm going to probably up the ante a little bit. Instead of risking 2%, I'll probably risk 3%. And most likely it's going to be a winner because we just had a loser. And in 2 years, it hasn't had more than one loser in a row. So here we had a winner right there. So basically the algorithm, the way it works is we, in stocks or equities, I only trade to the long side, don't trade them to the short side because potential of gaps and running and all kinds of stuff. I've blown up a few accounts trading equities to the short side, getting surprised overnight when bad things happen to companies or good things when you're shorting them. And that's what happens to your account sometimes. Gaps up 300%, you're using your margin, sometimes game over. So anyway, I don't short equities. So here we are. I do short ETFs and stuff like that are tied to the futures market though. So we have a red to green, dashes above the white line, and we're in. So this is a similar algorithm to one of my futures algorithms, but it's different. But it is a bit similar in the way it displays, if you will. So red to green, dashes above white line, indicate an entry on that candle, and then that was our entry right here. And then it's a 1-to-1 strategy. There's our stop, there's our target, and then from there on. And some stocks like Roku, I have a different exit strategy, so I can get a lot more out of that one. Which if you're trading that exit strategy, you got a 5R out of it recently, which is pretty sweet. So we have a green there, winner. Took a loser here, a straight loser, which is awesome. It's great when they happen that way. You're not stuck in it for like a month and it turns into a loser. You're just in, you're out, moving on. You got your capital freed up. So then we had a winner. So let's count that. So we had 2 winners, a loser. So now 3 winners, a loser. So you got 3 and 2, winner. So it's 5 and 2, 6 and 2, 7 and 2, 8 and 2, 9 and 2. So 9 and 2 is pretty good. So we have nine winners and 2 losers, and then the recent one we just had giving us 3 losers. So we had 3 losers and 9 winners. So we got 12 trades there. So that gives us a 75% win rate still. So I like it to be 80% win rate. I'll give it some forgiveness at 75%. But what that does tell me though is I need to pay attention to RAD, because is this going to start slipping? Am I going to find this in the 60% range? If I do, then I need to dump it. Actually, if I find it below the 70% range, I'm going to dump it for a while until it gets back in the zone. But right now, 75% is still pretty good. So we'll keep on trading it. And like I said, usually doesn't have more than 2 losers in a row. 1 loser and no second loser in a row usually. Green after red. So the next trade should be sweet. So there you go. So you see the 2-year chart with the strategy just as I described. Now, as long as it's within 2 bars that this dash gets above the line, I can trade it. Some stocks, equities are a little different. Some of them I won't trade when it does that. It has to be there before the trade happens. So different equities have their different things. What you'll find is, and I trade the same ones over and over again in my portfolio, and what you find is that different equities have their own rhythm, so to speak. And once you see what the rhythm is, it's pretty easy to trade their rhythm. But what works for RAD may not work for Tesla. So you kind of have to find the rhythm and then go for it. So anyway, there we go. So there's RAD for you. All right, let's go look at that other loser. Okay, so here is ADIL. So they do have some ties, they're pharmaceuticals, to COVID testing. So like rapid tests and stuff like that. And one of the big push is that, at least that's in the rumor world, if you will, nothing happens until it actually happens. I don't care who in the company says it. Could be the CEO. Until you see it done, it's not done. is, doing rapid tests before people get the vaccine to see if they really should be a priority to get the vaccine right now, because maybe they already have antibodies and they're protected for the next 3 months. So someone who's not protected at all should be the one that gets the vaccine first. So they have some different testing strategies and whatnot that they're pushing. And, they're looking pretty good as far as the current environment. They're also low float stocks, so it can be very volatile at the same time. That could be a negative when you're swing trading low floats. This could happen to you where it goes from $1.39 to $3 or $4 in a day. That's pretty awesome with low float stocks. But at the same time, this can happen because it's a low float stock. Everybody's taking their profits and getting scared and jumping out. So anyway, we had this big boost. Then we had another unusually large candle. You see all these candles? I mean, this, and then you have this big candle. I was like, it's not a tower candle by the algorithm, but I don't like it for this stock looking back in history. So I'm not going to alert this out. So I didn't alert it until it pulled all the way back to risk. So risk was, per the algorithm, is right here on this red line. But for me, looking back on this chart, risk was actually looking at this consolidation, looking for a breakdown of this consolidation. We're coming up here making a new high. So for me, if we made a higher low, we're looking for a higher high, and this is looking good. But I wanted to give it room to be able to make a lower low. So because we got a higher high, and if it's potentially going to make a lower low, then this could be game over for this trade. So I put my stop right here, just below this low, and it did make a lower low. So yeah, we had a green day. Now we're kind of going flat in here, and who knows? But if it does break back above and the algorithm triggers, then we'll jump back in this thing. But for now, this is this trade we got stopped out on right here, just barely got stopped out before it recovered a little bit. But right now this is looking like it could be a complete rollover. So that was the methodology behind that loser. So again, algorithm plays got some really great success. So like right here, we had the algorithm trigger the trade on this giant candle, and this is a tower candle, but per the strategy, no way I would enter a trade on this candle, right? Like, who would do that? Remember, tower candles, especially gigantic candles like this, like to retrace at least 50%, if not more. So that was another thing. We already did that 50% retrace, more than 50% retrace coming all the way down here. Came back up, triggered the new trade, was looking good. So, but this would never have been a trade. No way. But right here, got a nice little winner. This is healthy right here. Boom, we pop up this little pop. It's looking good. Yes, it's bigger than these candles, but it's not, unusual as you see going forward and going back. And like I said, it's low flow stock. So, boom, winner. We had some nice winners. So, anyway, you got the algorithm, how it works. Those are the two losers this week. Let's go look at the winner real quick. Okay, so here we are with APPS, so a nice healthy winner. We slowly came into this. We had this big breakdown here. Again, we don't short equities, and you can see here like how this wasn't green within 2 bars, so it wouldn't have been trading that long. Same thing here, now green within 2 bars. It's not over within 2 bars, so we didn't trade it long. And good thing, we would have got stopped out right here before the run. So try to follow the rules with the algorithm. So here we are. So nice entry right here. Jump into APPS and then sent that signal out to take this trade. Our stop is down here. And then, yep, it took a while, but then it got going. It got going really good. So, you either got out here on your 1-to-1, or if you're looking at the green red candle exit strategy, you're able to take advantage of that and ride it on up and get out somewhere in this area here. So you would have got like a 2-to-1 out of it. So it would have been a really nice trade. So APPS has been really good for us. We had our winner there. We had our winner here. Again, you can see how the algorithm down here is indicating the trades, and then indicated this trade just in time for it to be a fast loser, which is great. Winner. So, and then it keeps on winning. But if you take a peek at like most of the stuff with the algorithm, I'm going to try to start doing these videos on a regular basis so that over time you can see. If you're watching it on YouTube, you can quickly look through like, a year's worth of videos in, a short period of time. If you're fast forwarding, you can go through really fast and you'll really be able to see the true power of the algorithm. But a lot of times there's not 2 red trades in a row. So The downside to it is when you have a bunch of green trades, you know a red one's coming. So we may be seeing a red trade here in the next trade or two. It's fine. Get it out of the way. I'll increase my my risk a little bit to 3%. I only risk 2% on all these trades. I'll increase it to 3 after a red trade, and then that'll help me recover a chunk of that red trade plus get me right back on track. So there's our winner for the month. We still got a couple trades open. We'll see how they are. Once they've closed out, I will do the same thing and bring it to you. And if you are on my trade alerts, then you know exactly what those are. And if you're subscribed to over on 2020 Day Trader, then you get the weekly report, which has all those trades listed on it. All right, everybody, have an awesome weekend. And, you know, it's 2021, so be ready. Have your log updated. Get your new log. If you haven't, if you don't have a trade log, get one. Make one. Get paper. Whatever it takes. If you go to simpleswitch.teachable.com or 2020daytrader.com or etsy.com, you can find my trade log on there for 2021. Links will be in the description below as well. Grab a trade log, get your trade log ready, get your strategy all planned out. When are you going to scale up? You know, when are you going to get your paychecks? Like all that different stuff. Plan out your year. This is your business. Plan it out. Plan your trade your plan, and make some money.